Hey, it's Rav. Welcome to the Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. Listen, we all want to grow our money. Money is not the most important thing in life. Relationships are, but money can help. And it is wise to be able to grow our money. And so that's what this show is all about. The challenge is often we take our precious time, we go to work, which is a good thing, we get paid in order to eat. But imagine a life where money could make us money, we could work a little less if we wanted to, and then we could spend that time with family, friends, being involved in something benevolent like a charity. And so every single week we bring different everyday investors on to teach us, everyday people, how to become everyday investors. You could become an active investor, you could be a passive investor where you're just partnering with somebody who's doing the work, all sorts of good things. This is gonna be a great show. Don't go anywhere. We'll be right back.
Student rentals are rented by the room and not by the house. I mean, there really is opportunity for so much more cash flow when you rent out a single family home to students. I mean, easy adjustments like turning a living room into a bedroom or turning a big master bedroom into 2 rooms. You really can add space for students to comfortably live. Now, I'm not suggesting anyone go out and stuff 12 people into a room that fits 5, but with some smart, creative space planning, you really can maximize a house.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hi, it's Darren Mitchell from Control and Compound. If you're a real estate investor or business owner, you know the cookie cutter approach to financial planning doesn't work for you. You've got to be in control of your money. You've got to save and store your money differently than other people. At Control and Compound, we are the wealth coaches for real estate investors and business owners. We show you how to save your money, grow your money tax-free, multiply your money tax-free, and spend it tax-free. To learn more, please check us out at controlandcompound.com/everydayinvestor, where viewers of this show get a complimentary education session.
Hey, it's Rav. Welcome back to the Everyday Investor. We're talking about how we can make money investing in student rentals. I have the guru-ess, if that's a word. When it comes to student rentals, Gillian Irving's on the show with me. Gillian, thanks for being on the show. It's been a long time.
It has been a long time, Rav. Thanks so much for having me back again. It's great to be here.
Yeah, I mean, I know you love to keep busy. You love to work. When you kind of get into my age, early 50s, a lot of people start talking about retirement, and they ask me my opinion on retirement. And I in the books that I've read, the 2 words, Gillian, that were never in the original language, I'm sure there's more than 2, like .com probably wasn't in the original language, but was the word coincidence. And I attach that to my, spiritual journey. I agree with that. But the other word was retirement. I think we were always created to work, to do something. And if I were to open up the good book, he made the beautiful garden, but there was no one to tend the garden. So he created man, and man didn't do a good job. So he created woman to take over. But retirement, I'm like you. I think that retirement by definition perhaps means we don't have to work if we don't want to. But man, I want to always do something until my last days. And I appreciate that about you. So what have you been doing the last 2, 3, 4 years? I know you've been still cranking your student rental business. And, if there's anyone to ask about that business, I go to you. But what else have you been doing?
Well, I think since the last time I was on your show, we spoke about this before we were on air, but I sold the trampoline park business that I owned with my sister. That was we were really fortuitous with that sale. As I said, the timing was just before COVID. It was bought by our head office, so we could feel happy about that sale. They had enough funds to weather the storm. So after that sale, I just kind of put on my thinking cap and asked myself how I wanted to keep my professional life busy. Of course, student rentals is always figured in that. I think it always will, just because I'm so comfortable with that strategy. I also got my mortgage agent's license as well, just another sort of service that I can add on to investors who choose to partner with me. And I also run a charity, which will always run alongside my professional work as well. So that's doing great and thriving as well.
Tell me about that. What's the charity?
You know what, it's funny, I saw other investors, Quinton D'Souza, Erwin Cito, they started something called the Basket Brigade in their towns a long time ago. And I just thought, you know what, I do not need to reinvent the wheel. I can just look at what other smart people are doing to help their communities and copy them. And in fact, that's probably what we're going to talk about today. You don't need to reinvent the wheel. Find a system that's working for other people and do that. Don't go out there and do it yourself. So I did that for my charity, and it just has to be one of the greatest gifts that I have given to myself and to my community and to the other women who run it with me. So much need for raising funds for food and security.
Yeah, no, that's amazing. And for those that are watching, there's, as we're going to talk about today a little bit, joint partnerships, partnering together. And so if you don't have the time, but you have money, you could start or be part of a charity, or vice versa. No, that's so exciting. Many years ago, my friend Danny wanted to do something French speaking, and I had a few dollars and he had the time, and we were able to do something in Haiti, and it's still going now, a little orphanage. And so I think that we're meant also, if we're never meant to stop working, we're also meant to be benevolent, to be able to give. And no, that's such a great feeling. That's exciting. That's great. And so you've been doing that. You got your mortgage license. So talk about, it's funny. We have a mutual friend, Scott McGilvery. Many people know Scott. And his favorite asset class, is student rentals. He loves them. Where most people run from them, he loves them. And so why do you like student rentals? Tell me all about it. Pretend I know nothing about it. I've done almost every type of investment possible. I've never done student rentals. So, and that was a long time ago. If I was an active investor now, I probably would, because of you and Scott. But I'm just purely a passive investor now, so I don't do them. But if I was active, tell Rav why it's such a great asset class in your mind.
Well, first of all, most people look at it through the lens of what are the returns like. And because student rentals are rented by the room and not by the house, there really is opportunity for so much more cash flow when you rent out a single family home to students. Easy adjustments like turning a living room into a bedroom or turning a big master bedroom into 2 rooms. You really can add space for students to comfortably live. Now, I'm not suggesting anyone go out and stuff 12 people into a room that fits 5. But, with some smart, creative space planning, you really can maximize a house to fit a lot of people comfortably. So there's the cash flow perspective. Then there's the rental payment security issue. And when I tell that to people, they look at me like I'm bananas, because they mostly feel like rent would be a risk. But think about it. Students work hard in high school to get to university together with their parents. They're strategizing about where they're going to go. They pick a school based on, the programs they offer. So they're not arriving at university without a sense of what tuition is going to cost and what their expenses are going to be. So they pay their rent when they get there, because that's part of the school process. So I would say 99% of the time, I've had 0 problems with rent. It really never happens, because people want to pay rent so they can continue on their school journey. And then another great mechanism for students, I don't know where all your investors are from, but I imagine from across the country. And if you're an Ontario investor or a BC investor, you know that, getting tenants to move out of your properties can be hard, but students have a natural rhythm to their occupancy. So they come when they're in second year, usually out of residence, and then they move out after fourth year. So you're able as a student rental landlord to just reset your rents to market rents on a really regular basis without having to worry about people staying on forever. No one wants to stay in their student rental forever. They finish university and they carry on, they move out, they take their stuff, and you reset the rents and start again. So just from like a rent perspective and a tenancy perspective, it is, and an ROI perspective, of course, it's such a great little strategy. And if anyone has been watching the news lately, we've been seeing about international students sort of just the market for them is exploding. There's not enough places for any of our universities to house all the students, whether domestic or international. So, I mean, supply-demand economics are hugely in the favor of the student renter these days, student rental investment these days.
So let me ask you a few questions. So the type of dwellings that you purchase for students to live in, are these properties that you would want to live in yourself, or are they more, it doesn't matter, it could be, you know, a little dilapidated, people are still going to pay? What is you're advising Rav now, who's going to get into this business, what would you advise?
Me, I would rather have a product that I can feel proud about. I'd rather have a property where I'm going to attract tenants who are going to take care of my property. I'd rather have parents who feel comfortable and want to sign my guarantor form. So my business, I tend to make sure that all of the properties I own are in tip-top shape. So that means I take care of the maintenance. That means that safety is my number one priority, always has been. And yeah, I take care of it, because if you want students to take care of your house, you have to present them with, a home that when they walk in, they say, this is a house that is taken care of. Otherwise, if you can't respect your own property, why should they? Yeah. So I start with that.
Yeah. No, that's great. And how does it work? The 2 months, or the 2 to 3 months or 4 months where they're not in school and perhaps they go back to, mom and dad's house. How does that work? Is the rent still paid for the year, or you're out of rent for 4 months?
You know, that's a great question. And almost everyone asks that, because of course, if you have rent interruption for, 2 to 4 months of the year, the numbers wouldn't work at all. So I would say that almost universally, student landlords have their tenants sign 1-year leases. But recognizing that students many of them go home for the summer and the rooms are unoccupied. I've always had a very lenient sublease program. So if they wanted to subrent it to someone, I would never stop them from doing that. I just make sure that they're the ones, that my renters are the ones who keep paying, and then they just have to deal with their subtenant. But yeah, it's always a 1-year lease.
And roughly, how many people are we taking care of right now?
So the numbers have been going up and down over the years. So I've invested in Hamilton and Peterborough and St. Catharines and Welland. I'm now in New Brunswick. So, my portfolio, the size has ebbed and flowed over the years, but I'd like to say that I've had a lot of experience in a lot of different places. So.
Nice. Good answer. So 2 questions before we go to break. Who pays? Is it the student or the parents? And, a combination of both. What percentage would you say? And then secondly, can we partner with you, in terms of being involved investing in student rentals?
The students are the ones who sign the lease, but in most of the cases, we have the parent sign a guarantor form. So again, this is a safety mechanism that does not exist in any other real estate niche. We have 2 people who are agreeing to pay us. So the students are on the hook first. If they don't pay, we go to their parents. So there's always someone to pay. And as I said, 99.9% of the time, we have 0 problems with rental payments. I do work with partners. I'm pretty selective in who I work with. I'm the type of investing partner. I would rather build fewer deep relationships rather than lots of wide ones. So I will partner with people. We just got to make sure it's the right fit and that we would work well together. But absolutely, I work with investors. They can find me at gillianirving.com or on my website, which is investinstudentrentals.com. And I'm always happy to have that conversation, because I'm always happy to show people the student rental return matrix.
Great. And all your information's on the screen there anyways.
Okay.
Okay, well, let's take a quick break, and then we'll get into the numbers on one of your student rentals that you choose to look at. Don't go anywhere. We're talking to our good friend Gillian. She's teaching us how we can make money investing in student rentals actively or even passively by partnering with her. Don't go anywhere. We'll be right back. Hey, it's Rav. A few years back, I learned about trading stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to The Everyday Investor. We're talking to my good friend Gillian on how we can make money investing in student rentals. So, Gillian, what's kind of like when you do your diligence, what are you looking at in terms of an ROI perspective? You know, if you put a dollar in, what percent are you looking on an annual basis in terms of a projected return? I know many are going to be a lot higher, sometimes a little bit lower. And then also, what did we do during COVID? That's another thought that I had as well. So what's our ROI that we shoot for?
Yeah, so I typically look for an ROI on a property that's either like somewhere in the high 20s, closer to 30% in terms of an ROI. But this is using all the aspects of real estate. So the mortgage pay down, your cash flow, a very conservative appreciation number as well. So those three buckets together should add up to like roughly, 28, 30%.
Wow, that's incredible. And also, do you buy mostly turnkey where it's ready to go? Or do you buy something where you've got to rehab it? And, obviously we're looking for ways to add additional rooms per se, but do you find like complete rehab or maybe just a little bit?
No, you see, I'm more of I want to say a lazy investor, but that's not the right word. I would prefer to find a property that's mostly done and then add an extra room. So that way you're forcing extra return, but you don't need to do like a heavy duty rehab. That's hard work for me. And especially if you're investing in a market that's out of your immediate vicinity, that's something I don't necessarily want to take on. So I just look for a property that's well situated, that has the potential to maximize the space. So could we just simply put up a wall and make a living room a bedroom? Could we divide a master bedroom into two? Easy stuff just to improve the revenue for the property.
So we did well by selling our sporting business, our trampoline business pre-COVID. What about our student rental business during COVID? What did that look like?
You know what? I think most people freaked out during COVID. A lot of the students didn't understand what a lease meant. They would phone us up and say, I'm giving you my notice to terminate my lease in 2 months. And they didn't understand their obligation to the process. So it was a lot of just parenting, really like helping the kids understand what their obligations were, what my obligations were. I'm a pretty heart-centered investor. Not everyone is. If I really felt like some of my tenants needed a reprieve because of their parents, I negotiated stuff like that. But I think it was pretty evident, once COVID was passed, that universities were going to be open, it really didn't interrupt my business too much, with the exception of a couple of rent rebates for a short period of time.
Sure. That's great. Yeah, you have to always look at downside as well. But again, like I say, I respect your mind. I respect Scott's mind, and you're not fools if this is something that's that you're onto. You're obviously onto something, right? So so let's look at some numbers. Give me one of your properties. I know off air you've talked to me a lot about out east. So do you want to talk about that one, or what are we going to talk about?
Sure. Yeah, no, because that's exciting to me. This is a new little market I found. I'm in a medium town in New Brunswick, and I bought a property a couple of months ago for $225,000.
Wow.
So think about that. It begins with two. Us Ontario investors, you'd be lucky if anything started with a 7. Anyway, so I like this market because it's affordable, yet the rents are still pretty comparable. So just imagine what that means from an ROI perspective. So
how much?
So $225,000 I bought this property for.
Okay, now what?
Now I got a commercial mortgage on this. That's also a really interesting thing. We can talk about that the next show. That was qualified solely on the cash flow of the property. They didn't underwrite me, my income, anything. They just looked at the property. So I got a commercial mortgage on a single family home. It's 6.7% for 25 years. So my mortgage payment is $1,300 a month. So that's going to be an important number.
$1,300. Okay. So what I do want to look, we're going to look at those three things. You're going to get me there where we're going to look at those three things of them paying down your mortgage, a little bit of cash flow, and then a conservative appreciation. So you're going to walk me through all that.
Yeah, I am.
Okay. All right. Next.
Okay. So we've got the property's $225. So that makes a deposit $45,000. That you can put that in your back pocket for now. And what is rent? Rent is 5 times $650 a month. Like they pay $650 a room here.
Wow.
So the rent for a $225,000 property is $3,250.
Wow.
Right?
Yes. Well, why don't you, we talk a lot about what you can't find anywhere here in GTA,
Right.
and most parts of Canada, of the 1% rule. The 1% rule, meaning if you can get 1% rent for your purchase price, you're in business.
Yes.
And that's why people are going to the States, because you can find that in some pockets of Florida or Texas or whatever the case. But you're finding it right here in Canada better than the 1% rule. 1% rule would imply you're getting rent of $2,250, but you're getting $3,250.
Yes.
Wow. Okay.
Right?
Yeah.
Okay. So we know our rents are $3,250. The mortgage is $1,308. Now, for student rentals, you have slightly more expenses, and you do out here too. So in this town, property taxes are more expensive if you're an investor. Utilities out here are much more expensive. Everything's heated electrically. And so there's these crazy utility bills. I have to pay for a property manager. I obviously cannot manage myself. So when we take all of those expenses, so we've got the utilities, the property taxes, the property management fees, proper student rental insurance. Everyone needs that proper insurance, and maintenance, because, with all those bodies in a house, you have some maintenance fees. That kind of adds up to about $1,275 a month, like all your expenses.
Okay.
Okay. So if you add that to your mortgage payment, that's about $2,585 a month. So your net cash flow is about $665.
Wow.
So, that number is pretty generous considering you only put $45,000 in for the purchase.
Do you have the number there, what it is on a yearly? 665 times 12?
That's $8,000, just shy of $8,000 cash flow a year.
That's fantastic. And that's in hand, like that's liquid.
Yeah, and so that's about a 17.5% return on cash a year.
Yeah, because you said you're in for 45,000.
Yeah.
Right. 45K is our down payment. 45K.
Yeah.
Okay.
Yeah.
And so how you figure that out? You always take your profit, divide by what you're in for, and that's just one of the three ways that Gillian's making money. That's just cash flow. All right. Mm-hmm. And so out east there, what would you conservative, because we always want to inflate our numbers when it's expenses, and we always want to be conservative when it's our profit. Right. So what would you give yourself conservatively on a passive appreciation, it going up in value?
I put 3%.
3% of your purchase price, 667, what did you write there?
225 times 3%. Yeah, like 6,750.
Okay, I'll put 7K. Okay, so 7K, and then of course, the best part is a mortgage pay down. Mm-hmm. I mean, it's all good, but I'm saying over time, I've always told people, Gillian, that if I buy a house for $225,000 and 20 years from now I sell that house for $225,000, I'm happy because somebody paid all that mortgage down minus the $45,000 that you put in. So somebody gave me $180,000 and I didn't have to do much kind of work. You have a property manager, you're so on and so forth. So I love the meat of it. Now, obviously in the beginning, you being a mortgage broker, in the beginning, most goes to interest, but over time, more is going to keep going under my mattress as principal, yeah?
Right, yeah.
Okay, so what's that number then in a year? You said the mortgage payment is $1,300 a month. Of the $1,300 a month, which is $1,300, 12,000.
I want to say it's smaller, like because interest rates are so high, right? Like let's just say $3,000 a year to principal pay down,
so
right?
$250 of the, and I want people to hear this, of the $1,300 payment, only $250 is going under the mattress, which times 12 is $3K, but look how much money we're still making on that. So am I right in saying what I just said?
I think that's about right, yeah.
Yeah, so we're looking at 8 in cash flow, 7 in the increase in value, 3 it going down. We're looking at $18,000. And then Gillian, with your calculator there, if you can take 18,000 and divide it by 45,000, what's that spit out?
That's about 40.
40%.
Yeah, so that seems that's a bit high. So I don't know if there'd be other expenses in there that you would have to account for. Like, I always put in my appraisal and my, whatchamacallit, my appraisal and my inspection and all those kind of stuff up front. So I would say
those are like one time, those are the costs of doing. But I don't think it's high because of your purchase price versus your cash flow. I mean, that's again, that's fantastic. And so now here's the part that Rav wants to ask, not being greedy, but or selfish, hopefully smart and intuitive. Now, if Rav passed the test and Gillian says, okay, Rav, you can invest with me. How does this work? Do I get to enjoy some of the 40% return? Is it like, if it's 40%, are we doing kind of like a set amount? Is it an equity play? How does that work?
Yeah, I mean, I think I've structured my business like pretty much every other specialist in the field. I do all the work. I've set up a really amazing team out here. I have great realtors. I have lawyers. I have property management. I have snow removal. I have everything. I do all the work. I know where to get everything done. And you don't ever have to come out east. You don't have to do the 10-hour drive from Toronto. So for that, I take, it's split 50-50. But I think most people feel like when they see that they can get, a 15% return a year passively, it's not really so much about what they're giving me, but they look more at what they're getting for themselves. And so I think if they're happy with returns that are 15% or more a year, then they're happy to proceed. As long as they want to give up the work. Some people want to do the work themselves, and I applaud people like that, and I'm happy to coach people who want to do that. But people who want to just set it and forget it, that's what they can expect in terms of a partnership arrangement.
Okay, well, listen, time is gone by. We have to go. Yeah, I heard you say if people want to do this passively and enjoy 15 to 20% returns, reach out to you and let's see if it's a fit. But also, I just heard if I want to take a stab at this myself, maybe I can get some mentoring from you as well. We're talking to my good friend, Gillian. Her information's there on the screen. Reach out to her if you want to know more about how student rentals work. Gillian, thank you so much for being on the show with me.
Thanks, Rav. It's such a pleasure being here chatting with you about this. Appreciate it.
And thank you guys for watching. Without you, we would not have a show. Make sure you go to everydayinvestor.com. There you can see some featured episodes, things that I invest in personally, like land development, things like stock options. It's right there on the website, everydayinvestor.com. You can also sign up for our weekly episodes brought to you directly into your inbox. You want to be able to do that. And then you just want to be able to go to any of our shows via the YouTube channel through the site. So you can watch it on demand, any episode that you want. I've been doing this for 20 years. We thank you so much again for watching. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.